Welcome to the Life Insurance Financial Education Podcast. We're pulling back the curtain on high cash value life insurance, revealing its role in a comprehensive financial strategy to help you build wealth and achieve your financial goals. I'm your host, James Barber, your Oregon Cash Flow Pro.
This is Jane with Tax Exempt Millionaire Club.
And I'm Carlo Vaquera with NetWealth Finance.
Welcome back. Last week, we introduced you to the infinite banking concept. Specifically, we were addressing the accumulation phase, the beginning stages that most of us are in when we're learning about the infinite banking concept and we're just starting to institute it into our lives and supplement the rest of our financial plan. This week, we're moving on to beyond the accumulation phase. This is once we've established our infinite bank and even going on into multiple generations. What are the benefits of infinite banking once we get beyond the initial stages? Let's have Carlo kick us off with the importance of planning beyond the initial accumulation phase.
So there's a book by Garrett Gunderson called What Would Billionaires Do or What Would the Rockefellers Do? And it's a great book that goes into this concept of creating generational wealth. And it highlights this through comparing the Rockefeller family with the Vanderbilt family. So the Rockefellers, I believe every single one of them are millionaires to this day, generations after the original wealth that was built by the Rockefeller family. However, the Vanderbilts, a lot of great things, the Vanderbilt University, so many things were spent during Vanderbilt's lifetime. Also, I think that he made a lot more money than Rockefeller did during their lifetimes. However, they didn't implement systems as a family to build that generational wealth in the Vanderbilt family. The Rockefellers did. They came up with processes like family constitutions, a family office, various things to ensure that their wealth would last for generations to come and it would actually continue to grow. So that's really, I think, the power of creating systems and having your infinite bank work for you and for the rest of your family for generations.
Excellent. Yeah, basically what we want to go over today is a number of the things that you might do to prepare more so like the Rockefellers, or so that we end up more so like the Rockefellers than the Vanderbilts. And whatever the efforts that we do today don't get squandered in the future generations. Now, before we move to future generations, though, we're still at a point beyond the accumulation phase, but we're still alive. What are we doing to manage our current wealth and utilizing the infinite banking concept in our current life that's no longer worried about what is the quickest way that we're going to be building wealth? Like you feel this urge to just be very aggressive in growing your wealth because there's such a limited amount of time. I know for me, creating the infinite banking process in my life and building these policies, these high cash value life insurance policies, it's given me a sense of comfort knowing that I'm already getting those steps in place for the future generations, even if I were to pass away today. Like I've already got the death benefits that are going to set my family up way better than I've ever been or than I ever expected to be coming from where I came from growing up.
Well, for me, since I don't have any other family here, and this life insurance concept is brand new to me when I first moved here. And then what I want, my plan is to really set up what we were talking about, the system, the policies, and educate the next generation about the policy, about infinite banking. It's not one policy sitting there. You just pay the premium, just keep putting the money in and wait for the final death benefit to pay off. It's actually the banking function we want to really change in the household. So I have a couple of kids. So my plan is to really get them into the life insurance. And then I will use their policy to do the IBC, what I'm practicing now. But I can also utilize those policies for my own retirement. And then upon my death, the death benefit will pay off to the kids and then minus the outstanding loan, whatever I have for that time. I think it's if we do it well and with the right education, every generation should be a multiple amount of death benefit to really supercharge the family wealth.
And I think that just like James mentioned with his being set up, and I think Jing also mentioned this, I don't come from lots of money, so I'm looking to set up my kids in that same way, have that peace of mind, knowing that I already have enough death benefit for them to build upon and continue to create generational wealth. And I am working to educate them and through utilizing my own policies during my lifetime for business funding, it's peace of mind with that death benefit, but it's also peace of mind for my own line of credit while I'm alive. Even though I'm still what I would consider in the accumulation phase, I do utilize the policies, and I think that is a big factor, is that we can continue to do that throughout our entire life, even during the accumulation phase.
Something that all of us have touched on a little bit, but one of the key building blocks for the beyond the accumulation phase is educating the next generation on finances. Like they need to learn about money. They need to learn about the infinite banking process. They need to learn about high cash value life insurance and why we're establishing this and how the death benefit is going to play a part in carrying that generational wealth, generation after generation after generation. Let's back up a little bit. Before we get to the next generation, we've established our infinite bank in our own lives. We've got this line of credit that's available to us. We've funded it properly, and we're not leveraged to the hilt on it already. So we're already using it as a place to store our wealth. The extra wealth that we've generated that's not going out in expenses, we're no longer necessarily looking for the next best investment to try to aggressively grow our wealth. But we've got this store of wealth. We're going to keep that inside of our life insurance policies. Like that's one of the best reasons to start doing infinite banking is in preparation for this. They say the best time to plant a tree is
10 years ago. The next one is now.
that's right. The next best time, if you didn't plant that tree 20 years ago, you need to do it now, right? We're going to plant trees that we're not going to enjoy the shade of. Our kids are going to. We're going to be establishing this generational wealth. Well, it starts with not spending it all. At some point, you get enough money. You don't feel the urge to put all of it at use. Like when I first started in the accumulation phase, like I had this urgency. If there was money, if there was a lot of money sitting in a checking or savings account, I felt like I needed to go invest it. I had to get that money working because it's got to grow. I've got a limited amount of time before I'm going to die or even before I retire that I need to grow this money. And as we grow the money, and once we get a bit of wealth, we start realizing that I need to just set some of this aside. I'm not planning on touching it. I don't need to touch it. I'm going to start setting this aside. And if an emergency happens, yes, maybe we will touch it. But if I don't, it's ready to get passed on to the next generation. And there isn't really a better way to pass money on to the next generation than utilizing life insurance. Life insurance automatically gives us a multiple of the dollars that we're putting into it. Like that's kind of the goal of life insurance. If we happen to die unexpectedly in the near future, a very large payout happens. A percentage or a multiplier of our annual wealth gets paid out. And if we end up living long enough, if we set up the proper policies, all of that wealth that we've accumulated, it still goes out as a multiple to our beneficiaries.
In my education, when I was studying all the life insurance, financial advisor, and the AUM model, I heard the story saying the worst asset you could pass to your kids is traditional IRA. Nothing, any money you never, which was never touched. The best one will be life insurance at the time of your passing, your at the time of your death. So for life insurance, because of the leverage we have, what we could help our next generation to really have that seed of asset to really magnify what they could accumulate in their lifetime.
I would also add to kind of what James was speaking to with the multiple, when we, the return on the unfortunate event that if you pass away early, then the return is going to outperform pretty much any investment that you might have had as well. So and when we have this death benefit, it instantly grows at the time of death to match what your death benefit is. Your cash value grows to that. So it is a good thing to have for that peace of mind and setting up your generations for success when you have that death benefit that is a multiple of what you've put in. So I think it's a great point that you made there.
So the next thing to think about, we've got this place now that we've felt comfortable storing our wealth and we're putting our extra cash into this life insurance policy. How do we make this better for the future generations? What do we do to set this up properly? We can not only have life insurance policies on ourselves, but we can get policies on other people. We can expand our system beyond just what me as an individual can qualify for a death benefit. And this is where people that really get into the infinite banking concept and they're making a bunch of money, they need a lot more places to store this money. We're going to add policies. So we can get policies on our kids, we can get policies on parents, we can get policies on siblings, we can get policies on business partners, we can get policies on employees. There's all kinds of places that we can look to add to our infinite bank, to add policies to this as a place to store extra money, because the government does limit how much we can store in any given policy based on the amount of death benefit. And for those of us fortunate enough to have a decent income, we can fill that up if we're diligent in our efforts. We can fill that up.
I don't yet have policies on my family members. Other than some basic ones that are coming from the term policies coming from work, but I do intend to have policies on my spouse and my children. And I've already started actually working with my mother. My mother does have a policy. So I'm looking to expand to different family members and have them set up for success, my own personal family and my extended family, because I think that this is a valuable tool for everyone to have. And that's, I think, part of what we do. We look to educate our extended family as well.
Yeah, I've expanded my policies quite a bit. I have 12 policies currently, and we've got policies on our kids. There's different purposes for these things, but my main goal with any high cash value policy I own is to max it out. If I can get as much money into all of those as possible, it gives all of them the best opportunity for success. And if I need to tap into them, I can tap into them. So like I'm the owner of all of these policies. I have control of that cash value. We haven't gotten the education yet and the next generation that we're ready to hand over those reins. I'm still in the building phase, preparing for my retirement and my spouse's retirement. And we're planning, like Ching mentioned earlier, we're planning to utilize all of the policies that we own while we're still alive. And there will ultimately be death benefits that get paid out. And those death benefits will pay off any outstanding loans that we might have on some of those policies on the future generations. When my kids have kids, we will get policies on them, and we're going to try to keep it going. Your kids can generally qualify for half the amount of death benefit that the parents have. So if you have a good amount of insurance on yourself, you can get a good amount of insurance on the kids while they're still dependents. Once they're adults and they get out of the house and they're no longer dependents, they're going to be limited to whatever their income multiplier allows. So it's a really good idea when we're thinking of generational wealth is to get on this as soon as possible. As soon as kids are born, we want to get policies on them while they qualify for insurance, because anything can happen after they become born. They only have to be 2 weeks old to get a policy. If they're 2 weeks old, they can qualify. And as long as obviously there's no health issues, they should just qualify for a juvenile policy. Once they become an adult, you can get it re-rated as a preferred adult policy rating so that you can keep the underlying costs down. But ultimately, we get started as soon as possible so we don't miss out on the opportunity to insure any of those kids. And we try to get as much coverage as possible on them.
I totally agree. I think within our culture, a lot of parents wants to give their kids a gift. I think the best gift we could give to them is a well-designed IBC policy. Or we can just, a lot of people just want to set up like a continuous gift each year. A whole life could be an option as well.
One thing that I do intend to do is utilize an IUL for my kids as possibly college funding, and maybe they don't choose to go to college. So 529 has a lot of stipulations on how you use those funds. So an IUL can be pretty flexible. So it is my intent to set up an IUL for each of my kids to possibly utilize for college funding. But let's say they don't decide to go to college. Maybe they want to invest in real estate, and at some point, we can utilize those to fund ventures for whatever they want to do when they're ready to start their journey in building their own wealth. And that's part of that education piece as well. So even if it's not for a traditional college education, we're looking to teach that entrepreneurship and how they can invest in things like real estate and other types of assets and businesses.
Good points. So high cash value life insurance can be a good place for people to store funds that might be earmarked for education for kids in the future, kids or grandkids, not knowing if they're going to actually use those funds for education. You're not pigeonholed into having to use those for education. So there's a lot of flexibility utilizing high cash value life insurance for that instead of your traditional brokerage accounts and what they like to push, which is your 529 plans.
There's the one thing I want to point out. All the life insurance, of course, we want to stuff as much as possible. Once we have multiple life insurance, when they are paid out, it will super jump your total asset. There will be inheritance tax. The current tax the current tax act will sunset December 31st, 2025. So there's a lot of discussion about what will be the exempt amount for the inheritance tax. But there's a way to really isolate what you own versus what you need to pay for the inheritance tax, which is called ILIT, Irrevocable Life Insurance Trust. The trust itself is an entity already. So basically, what we are trying to do is to set up ILIT first. Of course, you need to hire the CPA attorney to really set up the trust. After that, we need to get all the life insurance you own to move that inside of the ILIT. The main purpose is to isolate this whatever inside of the ILIT, the payoff of the death benefit will not count into your total asset. For a lot of high income earners, high net worth people, they use the ILIT a lot. I think it's very important to have that long vision about what will be at the end of the chapter of our lives. So we want to create as much wealth as possible. We don't want that to be a burden. So a lot of people don't know, depends on which state, sometimes you have to pay the inherited tax on the federal level.
So that's good to point out. Ownership. Who should own these policies that we're using for generational wealth? The ILIT, the Irrevocable Life Insurance Trust that you mentioned, is a tool that is often used. We might have to have a separate podcast topic with regard to ILITs and infinite banking practitioners, because there is something to be aware of. In order for it to be irrevocable, somebody else has to control it. It gets it out of your estate, which is why it doesn't count towards your estate tax exemption. Any money that's inside that, any assets that are inside your irrevocable trust is outside of your estate, but that's because you don't control it. So you have to have somebody else be the trustee. That better be somebody you trust. If you're planning to access cash values and policies that are owned by that irrevocable trust. I would think there's a situation that as your wealth grows, you have policies that are earmarked that you're going to be using for your infinite banking process. And there are some that you think you will probably not have to tap into those. Those are going to be the ones that I would consider moving over to that irrevocable trust first, because having control without having to ask anybody permission is kind of like the biggest benefit of these policies that we're growing. And we want to make sure that the policies that we're most actively using are still under our personal ownership so that we don't have any of those potential limitations. I can just imagine a situation where you get into retirement and you're planning on accessing those cash values to create an income stream. And whoever is your trustee, you say, "Hey, I'm ready for some money." And they say, "Sorry, I don't think your faculties are all there, and I'm going to deny your request." That just doesn't work in that situation. So I can just imagine. I haven't encountered that, but I can imagine that that might be some type of a tripping point later on if we do too much to try to avoid those estate taxes and move money out of things that we just don't have control when we need that control still.
When we talked earlier about the Rockefeller method and discussing some of those things, these are things that are kind of covered in that concept. And as you lay out your trust founding documents, you can define terms for accessing capital that basically are binding to your trustee. So there are ways that you can define terms for how loans can be taken, what purposes they can be taken for, accounting for scenarios where there are lacking faculties or various aspects. So there are ways that you can have elements of control that can be legally binding for your trustee if, even if you maybe don't have full trust in them. You should certainly select trustees that are trustworthy, but your founding documentation is what you will want to surely get right when you're laying out your plans for that. So I think we probably should have an episode discussing ILITs and these trust concepts, even though I'm not an expert on that, but there are ways that we can get into some of these surface level discussions around this topic, I would say.
I think that just highlights the importance of working with a good trust attorney when you're creating these things. Make sure they understand what you're trying to do and that it's ultimately that trust is going to help you meet your goals. So that basically covers most of the topics that I think we were trying to cover with regard to the infinite banking concept beyond the accumulation phase. We'll probably touch on these things again in future episodes, things that we might have missed or that we didn't just quite dig into enough because we're trying to keep these episodes bite-sized. We we don't want hours long episodes for you guys, and I'm sure we could go on for days if we wanted to. Be sure to follow along so that we can continue to talk about these topics. And if you noticed anything that was missing, if you had any questions that were still lingering after hearing this, reach out to us. Let us know. We definitely would like to address that. Do either of you have a call to action for our listeners today?
I would love to hear from the audience in the comments below. I think that this is an interesting topic. If you're planning your generational wealth and how you plan to utilize your policy, I think it'd be nice to hear from you. You could reach out to us or just drop us a comment. I think it'd be nice to know how you plan to create or use generational wealth with your family.
There's something very quick from me. I think we all need to educate ourselves and then really have a plan and then implement and utilize the IBC policies. In the meantime, also have a plan to educate your loved ones, your family members, your next generations. By doing so, that's how the entire household wealth can be accumulated and passed down many generations.
Good points. And I will add that Carlo mentioned earlier the book by Garrett Gunderson, What Would the Rockefellers Do? That's a good call to action. Check out that book. I remember reading it years ago. There was some good information in there, stuff that helps to get you thinking about beyond the accumulation phase and thinking of that generational wealth. Then have a conversation with your life insurance agent, have a conversation with your trust attorney. Start trying to figure these things out. You can start making notes about what you're learning, things to do. Have a to-do list that's getting yourself set up for that next generation. That's all for this week. Be sure to join us next week where we talk about the importance of the design of your high cash value life insurance policies. Signing off, I'm James Barber, your Oregon Cash Flow Pro. You can find me on YouTube at Oregon Cash Flow Pro.
This is Jane from Tax Exam Millionaire Club. You can find me on the school community there.
And I'm Carlo Vaquera with netwealthfinance.com. And you can find me on YouTube at Shapnin or Shapnin.
See you next week.
See you next week.
Thanks for watching.